If we look at the dollar at the time of recording, structure is still holding to the upside, right? We've had this push to the north. We're looking to reclaim this gap where we'd gapped to the downside. The reason we'd gapped to the downside because obviously there was all this optimism around a potential peace deal, progress being made there between US and Iran. However, doubts have been thrown on that given the latest updates with Iran, well, US launching strikes against Iran. But structure still remains intact because here we'd been printing higher highs, higher lows. But then we've been consolidating for a little bit because we're knocking on the door of this massive gap area where we'd gap. This previous drop here was a gap to the downside because obviously the ceasefire. And now we're trying to close that gap, but it's acting as resistance. It's proven to be very forceful. As you can see here, we've knocked on the door several times. You can see the significance here on the daily, right, where we faced those rejections. And now we're trying to challenge that again. But albeit we're still within a range, upper part of the range at psychological 99.50, where we're trying to fill that gap, and then to the downside support around 99. So we're caught within a bit of a tight range, but structure is still intact because this will be the validated as the extreme higher low area. But most likely today is we're going to be going for a push to try and fill that gap to the north. In terms of explosive breakout and play out to the upside scenario, that would be very much dependent on potential escalation, right? We need further escalation and things turning completely left, no signs of peace deal, strikes start happening back and forth between US and Iran, and obviously with Israel's participation as well, then this would drive dollar to break out. I would lean towards personally that this is going to be breaking out to the upside, especially with the growing inflation expectations and concerns, as we've gone over before. When you check out the CME pricing, the Fed's watch by the CME, the Fed watch tool, we are expecting very much higher rates for longer. Probability of rate hikes is drastically rising, especially as we get to the end of the year. There's over 50% probability they're going to be hiking this year in 2026. So I expect dollar to remain supported on that front.